This is Greg for Teslafaninsight. Today's show has a primary focus on the upgrade that was made by Argus on Tesla. We want to take time to thank our Patreon subscribers as well as our Patreon supporters and subscribers. And we also want to say a thank you to all of those of you who respond with comments, particularly constructive ones on our page. We're grateful for that. We're having some technical difficulties with which show is supposed to show where, so I figured I'd give my normal introduction today. So what I wanted to review with you is the fact that there's an entity called Argus, and they just upgraded Tesla to $800 a share. Why this is significant is the fact that we did a show called Permission for Ignition. So what happens is that there are basically two very large camps that are battling it out right now. And generally understanding how they move, why they move, can be very lucrative. So in this case, what I wanted to review is the fact that there's a situation happening where the large pension fund managers like the coverage of analysts validating choices that they make when they're selling stock, when they're buying stock or selling it for that matter. And so the pension managers slash large institutions actually know what they want to do with the stock in general, and they're doing just as much research as everybody else. It's just that it's very hard to get a job in the industry they're in. And if they have validation from analysts to make the moves that they want, they can be for sure that they could make a move. And that move, if successful, they're fine. If not successful, they're fine because they have the coverage of the advice they received to make the move that they did. So this method of operation means that very few people will step out there because it could cost them their jobs. So where we're at then right now is that Tesla's closed at 780 yesterday. Pre-market is up to 712. This is kind of the first mainstream analyst that's gone for the $800 price target for Tesla. And there are a bunch of things that are pushing the stock right now that we think is going to have a big impact on the numbers going up. Number one is the fact that this is the first $800 price target. Number two, this price target was handed over to the investment firms a day or two before we got it. And so the likely high price moves on February 4th of the stock price are reflective of this information being handed to large institutions before it got to the general public. So it's important to understand the very process that's used, A, and B, the timing of how the institutions tend to work with the analysts. And by doing this, you actually really get a leg up on what's going to happen with certain stocks, particularly ones that are moving a lot like Tesla over time. You just can flash and go, oh, it's 3 days in, the analysts have handed reports over, and the institutions have had a chance to both review and modify their buying and trading plan on that basis. So the next sort of 5 minutes of this show is sort of dedicated to behavior of large institutions and how and why they do it. And then the next 5 minutes from there is what the hedge funds will do based on what the insurance companies slash large institutions will do. So basically, we have a process going. If you're a large institution and if you've decided that you're going to take a large position in a company's stock, what generally happens is that you note the price you're wanting to pay. You then call up the trading firm that you use and explain to them sort of how you want to buy. Most of these big institutions will spread the trading over multiple firms because it makes it harder for people to front run them because you're seeing ordering capping from different places, so it's hard to tell where. Another rule of thumb is that when the traders are doing this, they try to do it in the first hour and a half and the last hour and a half. So you'll tend to notice the biggest moves in the stock price tend to be in those time frames because it gives the institutions an opportunity to hide their trading activities uh, within large volumes of trade or shares being traded. So if they do it kind of the middle of the day when there's not a lot of trading going on in that stock, it tends to move the stock either up or down. In this case with Tesla, it's likely up. And they want to pay as low a price as they can, especially if they're buying large numbers of shares. It can significantly impact the amount of money that is being paid to buy those shares, and thus the return that's gotten on those shares. So a very careful trading process is executed. If you're a trader, etc., please drop some notes on here on good technique of trading times and days. So where we're at right now, this is August is the first to sort of step out into the above 700, 800 zone in a buy sell for Tesla, a buy situation for Tesla. Basically, once you have, it's like with Jesus, when three or more are gathered, you're in the presence. And so you really you kind of have two, you need one or two more, and this will be cause for a lot more institutions to step aboard, because they'll be able to say, oh, well, these three guys that are experienced told us to do this, and therefore we did it for this reason. And if it goes well, good. If it doesn't go well, that's fine too, but because they have the coverage of that information. So we now are in a situation where for the next, call it week to 10 days, the not so brave firms will buy immediately when they got the green light and pay a little bit more. The brave firms will wait for 1 or 2 weeks and then let the market calm down on the stock price after earnings, and then they'll start to buy, because that's, that 2 weeks out tends to be the low point of pricing, and people have kind of forgotten about the earnings for that firm. And so you'll tend to find that the stock price will tend to trail back down because it's not center of mind news, and a lot of people have moved on to other things. And so that's when the sort of very brave, very well seasoned folks will come in and start buying in, I want to say, the cheaper market. So what we're also looking at then is the fact that we have a situation going on where Tesla is still 18% shorted. So as those institutions have started to buy, it started to, what I call, blow the covenants of the hedge funds. So it turns out that a hedge fund, particularly if they're short, particularly if they're losing money, there are certain covenants they have on the money that they have in hand. And those covenants mandate that, things, the amount of money they lose, the amount of money they have that are liquid, there are all these rules that are in place for them. And when a stock moves violently up like Tesla against short positions, you have a high likelihood that these folks will actually start breaching their covenants. So therefore, if they don't choose to sell voluntarily, or sorry, they don't choose to buy voluntarily the stocks of Tesla to close out their position, they could be involuntarily traded out because of covenant violations. And so we still are at 18%. Many people want to know where the stock is going. I believe that once you have the hedge funds forced out and there's maybe 5% of those guys left, this is about the apex of where the stock will be for a while, because there isn't a large amount of buying that's needed by the hedge funds that combines with what the institutions are doing. So the net of this whole thing is that obviously Tesla's in a great position. Obviously the stock price is very strong right now, and we're kind of in a position where those hedge funds have to pay up. And once they start buying a lot of stock in competition with other institutions, all you have is a nice upward move of the stock price, and we expect it to at least be up another 10 to 20% over the next couple of weeks, because of how there's a kind of a back and forth in this process. The institutions are buying, the price is going up. The hedge funds are getting in trouble, they have to buy. The institutions still need to buy more because they were averaging their shares purchased over a number of days. And so the hedge funds see this is happening, and so it ends up being a bloodbath for the hedge funds, what these guys are up to. So the hedge fund managers actually spend a lot of time figuring out what the institutions are going to do, when, where, how, et cetera, in order to protect themselves from getting blown out. So I bring this up today because there's a lurking question behind the markets, which is how can a stock that was theoretically worth $400 or $500 4 or 5 weeks ago now be worth $800? Well, the answer is the process I just described to you in a back and forth between different entities kind of creates a bidding war. And therefore, you could have a stock move very dramatically, especially one with as good a story as Tesla has. What I think is the most challenging piece of this for people who own the stock and who've done well is, wow, you've made a lot of money, and you've got to figure out, am I about to lose that money because the stock will retrench, A, or B, is it a great place to keep my money because it's still going north of where it's at? And this brings up an interesting situation, because one of the lurking back-end discussions to this whole thing is that the horizon for a hedge fund, or a good one anyway, tends to be short. Call it a few minutes, a few hours, a few days, a few months. That's the general tendency. There are some funds in that business that operate on a longer horizon, 2, 3, 4 years, et cetera, but the trend is a lot more short term. When it comes to large institutions, they tend to work on 3 to 5 year horizons. So we have kind of a funny thing happening right now with Tesla, which is that the pricing that you're seeing is reflective of what do institutions think about Tesla over the next 2, 3, 4 years. And so they can afford to pay a very high price for it, because once in, if it's worth $7,000 in 2 or 3 years from now, it doesn't matter that you spent $800 per share, because you're really chasing, the dollars that are 1 to 2 to 3 years out. And so they can comfortably buy in large amounts in that realm. A normal consumer, however, is thinking about, well, how did my portfolio do today? How's it doing over the next couple of weeks? How's it going, months, et cetera? And so the orientation of different groups of capital can be very different, and it tends to influence how they react to what the stock is doing, good or bad. So I wanted to walk you through this space because whenever I watch TV and I see certain analysts make comments, especially if they service large institutions, I kind of chuckle, because there's this constant discussion of the fact that Tesla has only sold, call it 500,000 cars, and they keep referencing the fact that larger competitors have sold 10 times the number of cars in a year and might make 500,000 cars in a month, for example. All of that's valid. The issue, though, is that institutions are working over many years, and so on that larger horizon, that stock price you're seeing now and where it's climbing to is reflective of the horizon for that firm. So that's why you'll end up with Ford and GM at a relatively low number. Their horizon in terms of growth of sales, et cetera, is what it is, whereas Tesla's horizon looks a lot more promising in terms of growth from where they are to someplace else in sales. And so it's kind of fun to watch the competition and dialogue between different entities, because the ones that are very clear on what's happening don't have to worry about the short term, 3 to 6 months, a year, because they know that they're a long-term player in the marketplace. And so you can, it's fascinating to watch this sort of mental battle between people saying, show me the revenue, show me the profits today, and then I'll show you what the stock price should be. And that stock price number would actually be lower than the current number. But again, the people who are driving this party are thinking on a different horizon than that, and therefore they can pay different prices, and they can handle things, their business, very, very differently. So and I think it's educational to go through this process, and we definitely look forward to what your thoughts are on this. So our anticipation, as we shared in our last show, of what's going to happen from here with Tesla is that until we can get below 5%, heading for 3 or 4%, for the hedge funds that are short the stock, I think they're really being forced into buying more stock as the institutions pile in with upgrades from other analysts. So we will definitely work to keep you abreast of what's going on with this. And for those of you who've made good money, congratulations. For those of you trying to figure out get in or not, it is pricey, as you just would imagine. They may have a pullback to some extent, but there are a lot of analysts lining up for a very bright future for Tesla. And I think we understand what the logic of that is, and mostly it's the fact that as you forecast the future, it relies upon how are competitors doing in terms of their preparation to be Tesla competitive. And if they're not, then it leaves a lot of market share for Tesla to gain. And as they gain that market share, they also gain nice profits and revenues. And the basis for higher stock prices is really there, lurking in this space of lack of competitiveness from big competitors. So we'll keep you posted on how all this is working. We really think Tesla has an upside. We have a February 10th $1,000 price target on the stock, and it's only 5 business days away. But given that the institutions still need to be heard and there are other analysts still needing to upgrade, we think it's actually very doable. But halfway there, still a good amount of money and profitable. At any rate, I think we're going to close out for today. I want to thank you for taking time out to join us. This is Greg for Teslafaninsight. Please remember to like and subscribe. We're also doing our private shows on a weekly basis, and if you want to start at a minimum of $5 a month on Patreon, our link is below. We can introduce you to our private shows. They give a little bit more intense strategies and techniques in terms of making money in this environment. We have a Patreon link as well. If you can't use that, we can accommodate you if you send us an email, and the payment method that you can do, we'll do that because your cards aren't charged until the first of the month. So for February, you've missed the window for a charge, and by paying, you get the private shows immediately rather than having to wait a couple of weeks. At any rate, I want to thank you all for joining us. This is Greg for Teslafaninsight. Don't forget to do 25 leg lifts a day. Don't go to bed within 2 hours of eating, preferably 4 to let the food digest, and no acid reflux issues. The 5-2 diet is a really good idea for mental health to consider. And we also want to encourage you to do fried foods no more than once a week, with health orientation being a key part of that. At any rate, thanks once again for joining us. Have a great day. Bye for now. Tschüss, macht's gut, au revoir, lehitrod, choda hafez. Zdravstvuyte, hello in Russian. Do widzenia, Polish. Goodbye. Ni hao ma, Chinese. I hope you guys are doing well with the coronavirus issues over there. Have a great day. Bye for now. Don't forget to like and subscribe, and thanks for joining us.